Are you struggling to pass the CPA exam? Did your review course fail to fit your learning style? I'm Darius Clark of I-75 CPA Review, the #1 course supplement, where the right teacher makes all the difference. And if you failed the CPA audit exam, you received a score report maybe that looks something like this. If you were weaker in Content Area 3, performing further procedures and obtaining evidence, that's 30 to 40% of the exam. It probably means that you need some help with the transaction cycles, like the revenue cycle, or expenditures cycle, or the cash cycle. So we're going to look at kiting in this video because the CPA audit exam expects you to know about kiting with regard to the cash cycle. I'm on the CPA exam Facebook groups every day trying to help candidates. And one of the questions I see almost weekly is about kiting. And how do you answer a question that looks like this, where they give you a bank transfer schedule and ask you which of the following cash transfers result in a misstatement of cash at year end. And the first thing to notice is that there's 4 columns in a bank transfer schedule. The exam will have prepared this schedule and they're going to ask you which of these 4 transfers, A, B, C, or D, is an attempt to overstate the book balance of cash at year end. So in a bank transfer, a company has 2 bank accounts and transfers money from one of the bank accounts to the other account towards the end of the year with an attempt to make it look like the transferred money is in both general ledger cash accounts at year end. So since we're only interested in what's going to misstate the cash balance in the books, then we only care about the columns that say per books. Disbursement date per books, receipt date per books. We don't care about the columns that say per bank. Why? Because there's 2 types of kiting, and that's what makes this kind of question even tougher. There's kiting to inflate the book balance, like this question, and there's kiting to inflate the bank balance. And in a question I'm kiting to inflate the bank balance, then we'd be interested in these 2 columns, disbursement date per bank, receipt date per bank. But we can ignore those 2 columns now because the facts indicate a misstatement of cash. That means cash in the books are misstated. So out of the 4 columns, we only care about the first column and the third column. Look at choice C, the highlighted correct answer. Look at the third column where it says receipt date per books. What's the date per books that the receipt was recorded? 12/31, which means the receipt of the transfer was recorded in the books on 12/31, which means during the year under audit. But the disbursement of the transfer wasn't recorded on the books until next year, 1/4, year 2. So the auditor looks at that and says the attempt here is to make it look like the cash from the transfer is in both general ledger accounts on 12/31. And obviously that cash can't be in both company accounts at the same time. The exam could ask you, why is an employee doing this, making it look like there's more cash in the general ledger than there really is? And the answer is possibly to cover up a theft, a previous theft of cash. So now the question is, what about the other choices? Why are they wrong? Well, choices B and D also show the receipt of the transfer being recorded on the books on 12/31 in the year under audit. Now let's look at the disbursement, and when was that recorded on the books? Oh, 12/31. So no attempt here on B or D to overstate the recorded balance of cash at year end. We'll go back to letter C. The receipt was recorded on 12/31, but the disbursement, there was that delay and it wasn't recorded until January of year 2, and that's why letter C was the answer, because it looks like there's an attempt to overstate the recorded balance of cash, so both general ledger cash accounts would have that transferred amount in it, which of course is impossible. So we're going to dismiss letters B and D as innocent bank transfers with no attempt here to overstate the balance of cash on the books at year end. What about choice A? Choice A shows the receipt of the transfer being recorded in the books in the subsequent period and the disbursement being recorded in the books in the subsequent period, so no attempt in choice A to overstate the general ledger cash accounts at year end. All right, let's try this question. How CPA is auditing Bruford Corp. While gathering evidence regarding cash, how CPA prepared the bank transfer schedule shown here. Which transfer would result in an overstatement of reported cash on hand at year end, an indication of possible kiting? Is it transfer A, B, C, or D? Only one of these is going to indicate a possible kiting because it's going to point to an overstatement of reported cash in the books at year end. So we're only interested in the columns that say per books, disbursement date per books, receipt date per books. We have a checking account and a savings account. The client has both accounts. They make transfers back and forth. There's nothing illegal about that normally, but the auditor fears that if it's done at year end, it's an attempt at overstating cash reported on the balance sheet. So the transfer is being made from the company's checking account to the company's savings account. And let's start with choice A. When does the savings account recognize this receipt in the books? It's done during the year under audit. So this receipt was recorded in the books before year end. Now we got to be careful. We got to look at the disbursement date per books, because if it's the subsequent period, then we're thinking about possible kiting going on. But no, it looks like it's the disbursement date of 12/31/14. So the cash transfer is out of the checking account and into the savings account, all in the same year. No problem there. What about choice B? Same thing. The receipt of the transfer was recorded in the books 12/31. What about the disbursement of the transfer? That was recorded in the books 12/31. So no attempt there to overstate the general ledger cash balances of the checking account and the savings account, because it's in the savings account and out of the checking account on 12/31. What about choice C? Okay, here the transfer was recorded in the books on 12/31/14 again, but look at the disbursement date per books. The transfer wasn't recorded in the books until the subsequent period. So letter C looks like it's an attempt to overstate reported cash balances. Letter C makes it look like that transferred amount is recorded in the savings account and still in the checking account at year end, because the disbursement wasn't recorded in the books until a few days into the subsequent period. So letter C is the correct answer. Let's look at D. In choice D, when is the receipt recorded in the books? Subsequent period. When is the disbursement recorded in the books? Subsequent period. So no attempt here to overstate reported cash on hand at year end. So in this video, we looked at kiting to inflate the general ledger balance of cash. There's also kiting to inflate the bank balance. And if you want to learn more about kiting or any part of the CPA audit exam, go to cpaexamtutoring.com and get yourself on I-75, where the right teacher makes all the difference.